it seems to me a big part of that is understanding management. Obviously, incentives. You know, Charlie Munger always says, "Tell me where I'm going to die, and I won't go there."
Yep.
And you know, I guess not everyone has exposure to management. Not many people pay as much attention to it as probably they should. Do you always get out and meet management? You go to the AGMs, you do all of that sort of stuff? And if you do, I guess, what are you looking for in particular in a manager and incentives? It's a very broad question, I know.
Yeah.
But it's kind of like just any kind of wisdom that you've broken down or distilled over the time that you've been managing money.
You might have heard some of these answers in the past, but obviously alignment is critical. The problem with being on a board and trying to incentivise management of a business is how do you do it? There's so many different mechanisms, but they all encourage different types of behaviour. Some of that behaviour might be good, some of it might not be so good for shareholders, but it really pays to go through the annual reports and work out, is this company incentivised on earnings per share growth? I mean, as an investor, earnings per share growth sounds pretty good, but as a manager, if I hit my hurdle this year, look how much I get paid, and I can get a lot of earnings per share growth by leveraging up the business, going to the Commonwealth Bank saying, can I have some debt please? Going and buy something that doesn't necessarily make sense, doesn't necessarily integrate well with the business, but you've got your earnings up and you haven't had to issue more shares as a result, but you've hit your earnings per share hurdle. So it's not real value creation in that example. We like to see management that have got a lot of skin in the game. I'm not the first person to use the phrase skin in the game, but if they hurt, if we hurt as investors, we want them to hurt as well. That's as a bit of a side note, that's kind of how we think about QVG. So I've got all of my money invested in the fund. I like to think that that's a bit of a signal in the same way that a manager having a lot of stock in their business is a bit of a signal as to how they're going to run it with respect to risk. So it really pays. Just another recent example, Latitude Financial, I can probably afford to talk about because it didn't get away. They tried to list it recently, but Ahmed Fahour, the CEO of that business, was going to get paid $22 million for getting it listed. So all he needed to do was get the thing away, and there was a huge pay packet for him there. And I think, without casting judgment, how can we believe anything that management are saying? Because there's just this huge incentive for them to tell us what we need to hear. So, that's a bit of a red flag. It also shows you how desperate the sellers are to get it away. They're like, Ahmed, whatever it takes, just sell this thing. We'll pay you what it takes. So signals like that are usually red flags for us.